A very good day to all of my fellow traders. I hope you are all well. I would like to welcome you all to the BTM FX group. My name is LODZ, and I'll be sharing something very interesting with you guys today. We will be looking at the Commitment of Traders Report, which is also known as the COT Legacy Report. Now, this data is readily available on the cftc.gov website, which is the Commodity Futures Trading Commission, which is based in Chicago, USA. Now, the data is published every Tuesday at 3:30 p.m. Eastern Standard Time, and we only receive it on Friday. Essentially, what that means is that the financial institutions, hedge funds, and your investment banks are all required to disclose their open positions to the public in the financial markets. They disclose this information to the Trading Commission, and in turn, they make it available to us on Friday. Now, how helpful is this information to us as traders? It's very interesting. It'll be very interesting to know what the big guys are doing relative to what we are doing. Okay, so basically, here is the data, which is I'm going to explain to you how and where I get it. All right, and then I've got my strength test, and then I also have the retail sentiment. Now, the retail sentiment, you can find this data on my FX book. You can also find it on Forex Factory and various brokers which share their traders open trades. Right, so let me just quickly show you where you can get the COT Commitment of Traders data. Right, this is the website, cftc.gov. Right, under this tab, Market Data Economic Analysis, you click on Commitment of Traders, and it will bring you to this page. Under the Chicago Mercantile Exchange, click on the short format, and you'll find all of the data, right? And then you can just take that data and just plot it onto your spreadsheet, right? So how do I analyze the spreadsheet, right? I've got my long and my short positions, right? The total, which is I add the longs and the short, gives me the total. And then I have the percentage of the longs and the percentage of the shorts. Basically, I just take my long positions divided by the total, I get my percentage, and I do the same with the shorts, and I get my percentage. And that overall will give me the net positions, right? Now, the net positions is basically your longs less your shorts, right? And give you the net positions, in this case being long. They are all green, right? So in this particular market, bias is net long, very bullish. Okay, and then I've got my strength test, anything between 50 to 50 considered weak, modest strong, 70-30 strong, 80-20 considered to be very, very strong, and 90-10 is powerful. You rarely see 90-10. You probably see it you probably see it with exotic pairs, but in this case we're just considering major pairs, right? So what do I look for? I look for trending markets, right? I look for trending markets. In this case, I found this with Usdjpy. Why? Now, guys, I am back testing right here. Remember, guys, when you back test, it's kind of like a cheat sheet because you are seeing what's already happened. Our goal is to anticipate what's going to happen in live time. Right? We are back testing this information. So I just want to verify my back testing with you guys. Right? So suggest you get a pen and paper and just make notes as we go along. So what do I look for in a COT report? Right? I look for consistency. I look for consistent decreases or increases with the longs and the shorts. All right. So starting from the 10th of May up until the 28th of June, I found a consistent decline in the long positions, right? And I found a consistent increase within the short positions in a overall bullish market. So what does that mean? The market is trending higher and higher, bullish, but with pullbacks, right? Pullbacks. So basically they've got higher highs and higher lows. So I want to look, I'll be looking to take advantage with the pullbacks on higher highs. Right. Now let's look at this information relative to the chart. Okay. Right, that this is a prop, firm or a prop fund chart, right? So you see there it's true proprietary funds. So I'm doing a prop challenge with true Forex funds. Demo, I don't know why they put demo there. I guess it's just the way you go through a challenge verification phase. If you pass both those phases, you then receive a funded account. So I'll talk about prop firms in my next video. Okay, so the goal here, guys, is how do we use this relative to live trades, right? In live time. All right. So I highlighted this time area between the 10th of May and the 28th of July. All right. And I saw a consistent decline in the long positions and a consistent increase within the short positions in the overall bullish market. Yes, got that. So as soon as I see this, right, I go to my platform, right, and I look at key areas. What happened during this pullback, right, relative to the COT report, right, and this pullback over here, and this pullback over here, and this pullback over here. You notice, guys, that I've broken my chart into weekly phases, right, which is in line with the COT report. So we received the information, the COT date on the 24th of May. There's the 24th of May. All right. So we've established that on our COT report, there are net long. You see that they are net long. That's a tick, right? Number two, we established that they are slowly cutting longs, right, and slowly increasing the shorts. So in this regard, we are anticipating some form of pullback within a very bullish market. Okay, let's look at this area over here. Let's pay attention between the 7th of June and the 14th of July. What happened in this regard relative to the COT report? 7th and the 14th of June. I think I said July. No, it's June, guys. 7th of June and the 14th of June. Let's go to our COT report. 7th of June, they were at 110,000 positions. We received the data on the 14th of June, 102,000. So they cut around about 8,000 within long positions, right? So it was a 10%, if you can round this off, 10% decrease in long positions, right? And they increased their 18,000 to 32,000 shorts, right? Which is a 10% increase in short positions, right? So they're adding shorts at the same time they are cutting longs. So basically what they're doing around this area is they're booking profits, or closing their buy positions, right? And they're probably going to leave our liquidity, which is our open trades, to move the market down. So they're probably going to get traders to sell, jam them up, sell, only to snatch the market against them and push upwards, right? Remember what you said when you started, that this market is overall bullish. So the COT report, guys, it will not tell you when to enter the market. Don't get that wrong. It will not tell you when to enter the market. You have a strategy. Your strategy should be the one that indicates to you when to enter and when to sell. In this case, I happen to have that. I'm going to share with you my signature trades when I enter the market, right? When do I buy and sell? Okay. So by now, guys, you should understand my signature trade setup, right? Whenever there is a pullback, 90% of the time, you will always find the signature setup, right? Let's go to the 14th of June. Will we find the signature setup? There's the 14th of June. So I'm on the H1 chart. Remember, I was on the H4, now I'm on the H1. No? Now let's go to the M15, right? Now, guys, let's assume, remember we're backtesting, let's assume that we are at the week, let's assume we're at the week beginning 14th of June. Now, I've established that they are slowly cutting the longs and increasing the shorts. So around this week beginning 7th, I am anticipating some form of pullback. All right, I'm anticipating some form of pullback. In this case, we are at the weekly high. We are at the weekly high on the 14th of June. First check of my trade setup at a high is the 50 crosses the 200. Right, I've got the first hit on the Mayo, the second hit on the Mayo. This is my M pattern. This is the M formation. This is a signature setup. Right, where do I enter? First candle that closes below the 13 EMA, which is the red line. Let me just mark it there for you guys. There, around about this point, I'm net short. Selling. Let me just change the color for you guys. Let's find a nice color. Dark green. Yeah, dark green again. Okay. Let's see that white. So at that area, I will execute a sell. Where will I exit? Usually my target is at the 800 EMA, right? So I always target anything between 50 to 100 pips, anything to 50 to 100 pips. In this case, now this is where candlestick formation comes into play, right? The market, as it's going down, remember my target is here, right? But I don't put my TP as yet because I'm behind my screens at this point in time. I'm staring at my screens like a hawk, so I'm just watching it. So look at this candle over here. Look at how aggressively it broke the 800 EMA. So in this case, I'm probably thinking, okay, it broke it, it didn't test it or play around the 800 EMA. So the likelihood or the chances that it will continue to drop is quite high. So in this case, I trail my stop loss, right? I trail my stop loss. So as soon as I hit 50 pips, right, I trail my stop loss to break even. Okay, so there's 50 pips somewhere. So after it continued to break, probably when the candle closed over there, it's already at 96 pips. I move my trail stop to 50 pips. So I've got a guaranteed 50 pips. Boom. So I'll probably trail it 30 pips behind the current price. So if it's at 100, I'll trail it at 50. As so on it moves and so on it moves and so on it moves. So in this case, at where this week closed, let's see, 190. So I probably would have bagged 100 pips in this instance. I would have bagged 100 pips because that short pullback probably would have knocked my trail stop, right? I'm not sure, right? Remember, guys, I'm back testing. I missed this opportunity. But yeah, anyway, I'm taking advantage of the pullback. But at the back of my head, I know that this is a bullish market, so I'm not going to hold this sell position, right? I have to take profit somewhere, right? And notice something very interesting here, right? We've got a nice mini divergence which played out there, right? You see that my TDI broke out of the support band and then it closed inside the support band. So that's a nice confirmation that the pullback has ended. Okay, we call this a blood in the water situation, right? So I'll also make another video just explaining how I use the TDI to my advantage. Okay, so I've taken advantage of the pullback. Now I'm looking to buy, right? Now using my strategy, how will I catch the buy? All right, how will I catch the buy? Now this is where my TradingView platform comes into play, right? The nice thing about TradingView, guys, is that they've got a free mode version. You can just use that just to analyze. So there's a free version to use. So I take advantage of that. I pay nothing. I just use it as it is, right? As you can see, I'm on the basic current plan. So I just use this to analyze. I love trading. So this trading view, I just plot my support and supply levels, right? Guys, you probably know the support is resistance here. Supply and demand, same thing as support and resistance. Okay, so we are on a weekly chart over here, right? We're on a weekly chart, right? Let's move down to daily. Daily. Right, we're on a daily. So my trading view template, it helps me plot higher lows, right? There's a higher low, there's another higher low. So you see we've got a impulse to the high, pull back, impulse to the high, it breaks this level, pulls back, but fails to break this low of the pullback, right? That's the first indication of a uptrend. Impulse to the high, breaking this impulse level over here, right? To create another pullback low, failed to even come down to this level, so forth and so on. When we've got a string of higher lows, we've got a trending market to the high, right? This is a basic 101 Elliott wave concept. All right, when you've got a string of higher lows, you've got a uptrend movement, right? So 2022, we are, let's see, we're looking at 7th to the 14th of June, right? 7th, April, May, June, 7th of June. So for those guys who trade patterns, right? Your flags, your bullish friends, your bullish flags break out and retest, they would have seen this happening, right? They would have taken advantage, having the information of the COT report that this market is net long. They would have taken advantage of this flag over here breaking out. So let's look at it on the 4 hour. Let's look at the flag on the 4 hour. There you go. So this is exactly what I was explaining, that they've got a short downward trend or a flag or a channel, whatever you want to call it, to the downside in an overall bullish market, right? There you see the breakout, right? So breakout traders will have spotted this, taking advantage of this buy, retest, see the resistance has now become support. See that double top over there, right? This was a resistance level, breakout, retest, right? So we've identified that as well. So now let's go to the 7th of June relative to our COT report. Okay, so 7th of June, probably would have seen this the week before the 7th, right? Probably the 31st of May, right? Probably would have noticed this, because I look at both the market maker template and the supply and demand template as well. So I always look at both of them relatively. So yeah, probably have picked its breakout, but hey, I don't know. Like I said, I'm back testing here. Okay, so 7th of June, this is the pullback that we are talking about on the 14th, right, of June. This is the pullback. This is the pullback, which is my signature setup right over here. Right over here on the 15-minute chart, 14th of June, right? 14th of June. Let me just confirm the time. Let me just confirm the time, guys. What time would it have been for me to execute this setup? It would have been at 8 a.m. GMT. All right. So here in South Africa, it's in the morning. 8 a.m. is in the morning. So yeah, I would have caught this at 8 a.m. in the morning on the 16th of June. 16th of June, right? There you go, 16th of June. Just pay attention, there it is, right? 16th of June. Okay, now let's try and find that on our trading view template. 16th of June, 16th of June, 16th of June. Yep, exactly the same, I would have caught it. And remember, I said that you catch the pullbacks within a bullish market, right? I know that their overall bias is long. So if I looked at this trading view chart on the 4 hour, right, I would have seen that there is a strong support level over here, right? There's a strong support, also known as demand, that after it bounced, didn't even break it or play along, just a quick tap, 1, 2 candles. Get these 2 aggressive candles. Let me just zoom in a bit for you guys. There we go. See those 2 candles, 1, 2, 3. Confirmation that as per the COT report, 7th, 14, they are maintaining their overall bias, which is net long, right? Which is net long. However, 21st of June and the 28th of June, they are still decreasing their long positions and slowly, but notice now they're slowly increasing the short positions now. They're increasing by 1%, right? Not much. The week before that, they increased by 3.5%. This week, they increased by 1%, right? And the overall bias, like we said, is net long. Okay, so confidently enough, you would hold your long position, probably enter at the close of this candle, right? Remember what we said on the COT report is that anything between 70 and 30% is considered to be strong, right? So where are they? They're at 71%. So it is relatively strong. So in this case, you are scaling USDJPY for buys. Under no circumstance should you guys be holding shorts. Do not hold shorts in this market, because what's happening is that a lot of traders were jammed over here. They were caught selling. They were caught selling. You probably looked, oh, look at this nice channel. Look at this resistance trend line by the nice support trend line. This channel is moving nicely down. So we have a reverse. Now let's assume that anything from here on hasn't happened, right? We're backtesting, right? Let's assume that it hasn't happened. You are selling over here and you're probably thinking, no, prices are going to reach probably this level over here, or it's going to reach this trend line, right? Let me go back and just show you on the daily. Right. There it is. So I can guarantee you guys that traders were caught selling over here. Selling. They were jammed selling over here. Probably thinking, the market's going to come back, it's going to test this trend line. This is a huge reversal. USDJPY is at its all-time high, extreme high, etc., blah, 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 and they are caught selling over here. And notice what happened. Within 1, 2, 3, 4 candles, all of that selling that the retail masses are doing has been cleared off the board. That's it. Accounts wiped, margin call, stop losses hit, you name it, out of the game, right? And look at all of the candles in this channel. Look at all of the work that's been done here, selling, convincing traders to go short, convincing traders to go short, convincing traders to go short, only to snatch the market away from them and shoot even higher. Remember, guys, that is the market's job, right? That is the market's job, is to show retail traders one direction only to go the other direction. So the markets are not random. Well, that's my opinion, right? Everyone is entitled to their opinion. So I'm of the notion that the markets are not random. This thing is pre-planned, right? It's pre-planned, right? This is a money game, right? Remember, whoever is selling, someone else is at the end of the stick receiving. So the banks want our money, the institutions want our money. So they have to show us some form of direction in order to get us to commit to a certain bias, whether it be short or long. That's just the nature of the game. All right. But because you have this information of the COT data, right, at the back of your head, you're like, no, man, this thing is overall net long. There's no way they could be reversing the market around about this point, because the long positions relative to the short positions is at 71%. So this is a 71% strong bullish market. So you should be thinking to yourself, I should not be selling at this point. Now, guys, let's assume we do not have this data, 5th, 12th, and the 19th. Let's assume we don't have that data. All right. So from the 28th, moving to the 5th of July, what's happening now? Remember, they were decreasing the longs. Now they are starting to increase the longs. This is fine. Now they're doing the exact opposite. They are increasing the longs, right? 5th of July and 12th of July. Those 2 weeks, they're increasing the longs. And what are they doing to the shorts? Now they are decreasing the shorts. So immediately after I get this information, I'm like, huh? From 89,000, these guys were cutting longs. Now they're adding longs, right? So now they are confirming their overall bullish bias, right? 5th of July. Let's go to the 5th of July. Let's go to the 5th of July. That let's just highlight it so that we can make a mental note. 5th of July, there, right? What happened within that week of the 5th of July? Prices are steadily on the rise. So at this point, you're probably telling yourself as a retail trader, no, I see this nice double top. This is a nice resistance. Prices are reversing, yada, yada, yada. And then what happens? Boom. Breakout, retest, even shoots higher. So we see a string of higher lows, right? We see a string of higher lows. Let me just highlight that for you guys. There's one. Okay. There's another. And there's another. And there's another. These are higher lows, guys. Higher lows is an indication of a uptrend. Higher lows and higher highs. So if the current high breaks the previous high, all right, guys, sorry about that. So if higher lows are on there, if you have a string of higher lows and higher highs, it's an upward trend, because this higher low level, right, to this higher low level, it didn't even begin to come back to this level. So these higher lows levels are always holding. They are always holding. So guys, how would you use this to your advantage, all right, in terms of following the trend? Okay, so my strategy is that I always trade off the 200 EMA, W's and M's. That's it. That's my entry, or that's my trigger entry for buys, right? So I know the market is very bullish, so I'll be looking for anything that bounces off the mayo. Here's the 200, the white line, right? I call it mayo because it looks like a mayonnaise. They originated that, but anyway, this is the 200 EMA. I'll be looking for any potential bounces of the 200 EMA. There you can see it. There's another, all right? So anything bouncing off the 200 EMA, I am buying. Right, there's another opportunity. Okay. Oh, remember I said, let's assume that we are still on the 5th of July, right? So let's assume that this information or these prices haven't happened yet. Okay, so we're on the 5th of July. 5th of July. Okay, let's go back to our COT report, 5th of July. So 5th of July, 12th of July, now they are increasing longs and they are decreasing shorts. As soon as I get this information, this 95,000, back of my head triggered, these guys are even more bullish. They are even more bullish. They were at 71%, now they're at 73% overall bullish, right? Increase from 54,000 to 59,000. So upon receiving this data, go back to my charts. I'm still holding. Remember we said, let's assume that the information of the 12th of July and the 19th of July hasn't happened since we're still back testing. Around this area, I am buying. I am buying, right? Around this area, I'm buying. Okay. So we see a nice bounce off the 200 EMA. This can be considered as a W of the 200 EMA, right? Is it in a time where I could trade? Let's look at the time. Yes, this is around 9 a.m. GMT time. So it's probably in the morning here in South Africa, running to 12 noon. Yes, I'll be buying, right? Probably hold it until next week, until we receive the data for the 12th, right? So guys, since we're back testing, I'm assuming this is what I would have done. Okay, I'm back testing here, guys. So I'm trying by all means psychologically not to cheat myself, right? But I know my trading style. Had I seen this, analyze the COT data, very, very high chance I would have bought.